Now, before we begin our analysis of the labor market, fair warning. The first jobs report of the year tends to be noisy. With updated seasonal factors and birth-death model forecasts, benchmark revisions, and new population estimates, it can be difficult to discern any short-term signals in the data. That said, broad trends in today's report showed a labor market entering 2025 with solid momentum. The U.S. economy added 143,000 payroll jobs in January, falling short of consensus expectations. That said, with a slightly above-average number of workers working part-time due to bad weather, colder temperatures and increased snowfall may have had a modest negative impact here. After revisions, job growth in 2024 was weaker than initially thought, with 166,000 jobs added per month post-revisions, down from 186,000 pre-revisions. Now that said, 100,000 more jobs were added in November and December than initially expected, indicating stronger year-end momentum. Looking across sectors, services continue to dominate private payroll growth, with healthcare and social assistance leading the charge. On the other hand, leisure and hospitality employment fell for the first time since June 2024, with potential drag stemming from the LA wildfires. Employment in goods-producing sectors was unchanged, while government employment rose in line with its recent trend. In the household survey, the unemployment rate ticked lower to 4%. Population adjustments were significant this year due to increased estimates of immigration, with revisions adding 2.1 million people to the civilian labor force. Remarkably, of the now 2.7 million workers added to the economy over the past year, 72% are estimated to have been born outside of the United States. With slower immigration, unemployment should hover around 4% for much of this year, absent any shocks. Wage growth picked up to 0.5% month over month, bringing the year-over-year gain to 4.1%. While this print is hot, solid productivity gains should limit any meaningful price pressures stemming from the labor market. Despite the short-term noise, this report brought clarity to longer-term employment trends. Employment growth in the establishment survey has diverged from that in the household survey, with the former showing 4.2 million more jobs created for the 3 years ended December 2024 prior to revisions. Now, with the establishment survey revised lower and the household survey higher, that gap has narrowed to 1.5 million in January. While modestly softer, job gains over the past year were able to support solid economic activity, and absent any external shocks, this should remain the case in 2025. Given recent strength in economic data, this report did little to sway the market's perception of the Fed's ability to stay on pause, with a first full 25 basis point cut not priced in until September. Thank you for watching. For more of our insights on inflation, the economy, and investing, you can check out our website at am.jpmorgan.com/insights or our mobile app, Insights by JP Morgan Asset Management.